As commodity cycles turn and investor sentiment begins to favour hard assets again, platinum group metals are firmly back in focus, and few companies are better positioned to benefit than Southern Palladium. With a Tier 1 project in South Africa's Bushveld complex, compelling economics, and strong leadership, SPD offers retail investors an opportunity to get in early on one of the ASX's few pure-play PGM developers. InvestorStream has crunched the numbers for a deep dive into why SPD stands out and why it should be on the radar of retail investors. The right commodity. PGMs, particularly platinum and palladium, have seen a significant resurgence in 2025. After years of subdued performance, platinum has overtaken even gold to become the best performing commodity of the year to date, fueled by a combination of tightening supply, strong demand from the hydrogen economy and auto catalysts, and rising investor interest in metals exposed to the energy transition. Bridge Street capital analyst Chris Baker told InvestorStream that the rally in PGM prices has underpinned the uplift in sentiment in the PGM sector across the spectrum.
Yeah, well, it's been a pretty remarkable time, hasn't it? I think last time we did this, the PGM prices were starting to rally, and really platinum, just as an example, it tends to be the leader, has virtually doubled since April. I mean, it's just been an astonishing performance. Again, I draw your listeners' attention to some very good commentary that are coming out, publicly available. Groups such as the World Platinum Investment Council has had some very good insights, and we've been using their work fairly extensively. But it looks as though at the moment it's investment demand, jewelry and investment demand, particularly out of China. Almost chasing gold. Gold has performed strongly. Platinum, hard assets, very easy to buy and sell, and those prices have been rallying strongly.
This turnaround is already being reflected in the share prices of ASX-listed PGM plays. Along with Southern Palladium, companies such as Future Metals, Zimplats and Chalice have seen strong gains in 2025 as the sector heats up.
That's translated not only to strong performance by the metals, but also by the underlying equities. And most of those, as you would know, are South African based. So finally, we've got some commodity tailwinds, and that's generated some really, really good returns. The three biggies in South Africa, Impala Platinum, Valterra, used to be Anglo American Platinum, now been split out from Anglo, and Sibanye Stillwater, both up, all three of them up very, very strongly. Implat's up nearly 100%, Valterra, the new company, nearly 70%. And the very leveraged play, Sibanye, up over 200%, literally over the last 4 or 5 months. So the big stocks, the big producers are rallying strongly. And that, of course, does translate into eventually that money, I see that as a bit of a favourable cycle. That money is then reinvested in some of the small caps. And we see that in the gold sector repetitively. And so we've seen Southern Palladium go very, very well. Under 30 cents, now over 60 cents. So it's more than doubled. Chalice, one of the Aussie favoured names, again, pre-production company, has performed extremely strongly as well. So we see the money flowing down into the small and mid caps, and we think the sector's got more to go yet.
Yet despite this renewed interest, Southern Palladium remains one of the only advanced stage PGM focused companies on the ASX with a defined reserve and significant resource base. SPD's Bengwinyama project holds a reserve of over 6 million ounces and a total resource of 40 million ounces, meaning it offers real scale and leverage to a rising PGM price environment. Importantly, its recently released optimised pre-feasibility study uses a conservative PGM basket price of almost $1,600 an ounce, which is currently 7% below market levels, providing further upside. Every 15% increase in the basket price adds approximately $200 million to the project NPV. The right address. Bengwinyama isn't just a large and high-grade deposit, it's arguably the best place in the world to develop a PGM mine. Located in South Africa's Bushveld complex, the project is surrounded by established long-life PGM mines operated by majors with access to all the essential infrastructure needed for near-term development. As Dr. Baker puts it, there are a number of reasons why operating in South Africa holds a significant advantage for PGM players.
The parallel there is to say, why is Australia so prospective for iron ore? It's the nature of the beast. The bulk of the world's platinum, palladium and other platinum group metals are located in the Bushveld Intrusive in South Africa. It's a geological oddity, but it's real, and this is where a very large proportion of the world's platinum and platinum group metals come from. It's challenging mining, it's underground mining, relatively narrow seams, but it's really where the bulk of this material comes from. And that's been the case for the last 100 years. Platinum was found roughly 100 years ago in South Africa in the Bushveld, and that's allowed the supply chain, the mining process and procedures to prosper in South Africa. A very cyclical business, as gold, as iron ore, as coal, but it is certainly one of the only major sources of PGMs. Therefore, infrastructure is fantastic. You've got plenty of water, now plenty of power. That's been a bit of an issue in South Africa, but that's now been addressed. And very importantly, skilled labour, and the calibre of labour and management in these mines is very, very high indeed. So they've been mining platinum group metals, mainly in underground mines, for, as I said, for 100 years. So they get it.
It's why, in comparison, new PGM hopefuls in Australia must overcome the double hurdle of technical risk and lack of processing infrastructure, adding years and potentially millions in capital outlay.
The opportunity there to mine, process, and then finally smelt and treat and extract platinum and platinum group metals is highly important. This is not like the gold sector. You can't just dig it and take it to the Perth Mint. It's not like that. Very importantly, you've got to be able to have a mechanism whereby you can extract the platinum and palladium and rhodium and other metals in an efficient and cost-effective way. And that happens in South Africa, and it really is one of the very few countries in the world where that does happen.
With PGM refining being a highly specialised and capital-intensive process, SPD's location dramatically de-risks the project. The Bushveld's deep operating history, access to global supply chains and supportive local services ecosystem makes Bengwenyama a standout development opportunity with significantly reduced operational risk. The right company? Southern Palladium has rapidly ticked off a number of key milestones and now sits on the cusp of significant value creation. The recently delivered optimised PFS shows a post-tax NPV of $857 million using a phased development model and lowest cost quartile economics. They are numbers that are hard to ignore and elevate Southern Palladium above its peers.
Nothing seems to disappoint us with Southern Palladium. We looked at this 3 years ago. It looked like a really good project. It had grade, very important. It's shallow, very important. Easy to access UG2 reef, which is one of the main producing reefs in South Africa now. And it has good access to infrastructure, power, water, labour, as I said previously. And as management's been saying recently, they have commenced with discussions with a number of the majors, the smelters, and they're quite anxious to get hold of this concentrate from SPD's Bengwenyama project. Nothing concrete, nothing signed and sealed, but certainly a good deal of interest there.
According to Dr. Baker, the recently optimised PFS supports SPD's positioning as a low-cost, high-margin developer with a realistic pathway to production in a market starved of new supply, while the imminent mining right is a notably significant catalyst on the horizon.
And importantly, a long mine life. We're talking 30 years potentially to justify what will be a fairly significant capital spend. And you will have seen they have released a revised or an optimised pre-feasibility study, which has managed to cut capital costs quite significantly. So it becomes a much more fundable beast. I think importantly as well, we're just about to see the granting of a mining right. That should happen within the next month or two or three. Most importantly, they've just received environmental approvals, and that was an important precondition for that mining right. So all of a sudden, the skills are lining up. The project is progressively becoming de-risked, and with the commodity tailwinds that we're seeing, that's given the share price a nice little run.
SPD offers retail investors something rare on the ASX, a low entry cost opportunity into a large-scale advanced stage PGM asset in a proven jurisdiction, with the tailwinds of a rising commodity price and clear de-risked development pathway. Liquidity and volumes are starting to build in recent months, and for those looking to position ahead of the mining right decision and DFS news flow, this could be the right commodity, the right address, and the right company at exactly the right time.